Alright everyone, Cowboy Trades here and welcome back to the channel for another quick update on Kadena. So our KDA trade just got stopped out in a 66.5% profit, so congratulations to everyone who did enter this with me. I do want to talk about what I'm going to be doing with the next trade, what I've got eyeballing up for Kadena at this moment in time, including a new price target and some new analysis. So let's dive right into this and talk about Kadena's next move. Now, if you are a veteran of the channel and you have been watching my higher time frame analysis, really nothing has changed, so I will just quickly dive through this for the new people on the channel. We were discussing how obviously Kadena just came up to these volume profiles, which also correlates to these previous ranges. Now, we did get rejected from this range. We got rejected from the short-term moving average on the EMA ribbons, and ever since then on the weekly time frame, we are still bleeding down. Now, despite the bounce that's been happening for the past 4 days over on KDA, you can see the weekly time frame is still red. If we do come over to the Heikin candles on the weekly, you can still see we are in a very, very strong bleed out. Also, once again, we discussed these previous range lows flipped as local range highs. So it looks like we are going to be continuing heading back down to the downside for Kadena. On the weekly time frame, a lot of these oscillators are just saying that this breakdown is getting started, with the stochastic RSI still sitting around about 61 with lots of room to move down. The MFI is bouncing on the heart line at 54 with lots of room to move down. We're not in oversold territory. And the squeeze momentum indicator, despite watching KDA in the past month or so break down 30.6%, it has still not flipped bearish, indicative that when we do have these higher time frames, slower oscillators like the squeeze momentum indicator flip bearish, we will have a lot of room to move back down to the downside. And just very, very quickly, if we come over to the daily, you can see since this most recent bounce, you've got the stochastic topping out around about 86. You've got the MFI hitting the heart line and starting to turn down, and also you're losing some of that bearish momentum and coming back to reset momentum at the heart line. Obviously, we're in a bear market, so a lot of the time where you do reset momentum, like over here, this is normally a sign that it is probably the time to enter into a short, just like we did over here. And also, once again, we'll discuss our short in just a little bit. So what's this new price target and what am I going to be doing in terms of our next KDA trade? What am I currently eyeballing up for the market? Well, before we do discuss this new price target, if we do come over to this chart over here on the daily, I want to show you one very key level to keep your eyes on before we do discuss this price target. So as you can see, we have just lost the most recent 618 Fibonacci at $1.01, a price target that I mentioned in the previous video, letting you know if we don't hold this, we're very likely to cascade, and that is exactly what we did, all the way down to 88 cents. Now, if we do look at this trend line, you can see this horizontal trend line correlating to the range lows. We got rejected from this. We talked about this many, many times. You already know this, but this is the trend line I want you to focus on. We had candle body closes, wicks, 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 and then candle body close holding it, candle body close getting rejected from it, and then wicks rejecting from it. You held it as support a few times around about here, and now we are once again coming right back down to this trend line. So before we talk about my new price target, keep your eyes on this trend line at 94 to 95 cents. If you break beneath 94 cents, there's really nothing holding you up to the upside. We've already bounced on this 786 Fibonacci, so I don't think that we're going to come down and hold the 786 for the second time and just start zooming up. We've back tested the 786 once. We came back up to the 618 Fibonacci, came up to the 0.5 Fibonacci, got rejected, and we are melting through both of these. So really, this trend line here at 94 cents, if you really, really want to stretch this out, look at the 786 Fibonacci at 90 cents. But after 90 cents, there is nothing holding us up until we break down to new lows and come down to this new price target that I want to talk about. So if we clear up the EMA ribbons, we'll discuss those in the lower time frames in just 1 second. On the daily here, you can see with this most recent pump, we pumped back up to this trend line. You can see touch point, touch point, touch points here, and then we broke beneath it, flipped it as resistance, and we're starting to head down. Now, what is interesting about this is you can see that this is actually a beautiful, beautiful M pattern for Kadena with a price target down here at 67 cents. This is one that we haven't talked about before, and from where we are residing right now, you can see this is about a 21.5% drop for the market. On the 4-hour time frame, you can see it does look like we are flagging, and if we do look at the daily, you can see this pole would be right here, and this does look like a somewhat weak bear flag, and I mean weak in terms of the bulls. We didn't even have that retrace up to the 618 Fibonacci or even the 0.5 Fibonacci, so we are looking extremely weak right now. And if we do break to the downside of this bear flag, you can expect a price target round about 59 cents, which somewhat comes into correlation with our volume profiles. We do have a volume profile right down here at 50 cents, so I would really keep your eyes on 50 cents in the higher time frames like we've been discussing on the channel. But this is just one price target to keep your eyes on, not one that I'm so favoritive of. I much prefer how this M pattern looks. To me, this M pattern price target looks absolutely beautiful, and if we do come over to this bear flag, you can also see round about 93 cents would where we would be losing support from this. So, you know, we've got the 95 cents in terms of the trend line coming in right here, 95 cents. If you lose that, you've got 786 Fibonacci's at 90 cents, and of course you've got this bear flag around about 93. So if you start breaking beneath 95, 93, and 90, KDA is boned, and it is going to be coming down to new lows. And like I said, the price target I really want to focus on is this M pattern breakdown, taking us down to 66 to 67 cents, about another 21% drop from where we are right now. In terms of the EMA ribbons also, with this most recent pump, we got rejected. We had a wick up to the long-term moving average, rejected. We then had a candle body close underneath the short-term moving average, rejected. A double beautiful rejection in terms of wicks and candle bodies on this EMA ribbon, and we are heading down. 4-hour time frame, you can see that the EMA ribbons flipped bullish with this most recent pump, but they are now getting extremely tight as we are breaking beneath these. And whenever these EMA ribbons get extremely tight, you can expect a very, very big move to come in very soon. So it looks like these EMA ribbons are going to flip bearish, and this is going to be a failed move equals a fast move in the opposite direction. Other times where we've seen quick fake outs over on the EMA ribbons, you can see over here, during this pump from $1 up to $1.40, you can see the EMA ribbons flipped bullish. They very quickly flipped back bearish, and we had a quick cascade as they were flipping back short. Over here, this was a successful flip of the EMA ribbons, and we had a sharp rally. However, when we come back over here, you can see again, we broke down bearish, we pumped up so fast that we managed to flip the EMA ribbons bullish, and as soon as this was a failed move, this became a fast move in the opposite direction. A lot of the time when you see EMA ribbons have a bullish flip and then immediately get pushed back down bearish, they often present some nasty moves back down for the market. Here you can see another one. Failed move equals a fast move in the opposite direction. Here you can see failed move equals a fast move in the opposite direction. Over here you can see failed move equals a very, very fast move in the opposite direction. So that's what I'm focusing on right now, my friends. I do think KDA is coming down to 76 cents in the immediate short term. And in terms of the higher time frames, of course, while we are out of our KDA trade, while I have, you know, obviously said, if you've been keeping up to date with this trade, we entered on a 5x leverage up here at $1.25.5. We had our stop loss right here at $1.09, and unfortunately, we came right up, wicked through the stop loss, and then broke back down. So very typical. It is what it is. At least we walked away with 66.5% profit. If you are still in this trade, if you're not running a stop loss, then you will still be in very, very immense profit, over a 2x return on this trade at this moment in time. However, you know, like I said, congratulations. 66.5% profit is still very nice. If we are consistently making these trades over on Kadena, then obviously we are going to be laughing in the long term. So like I said, for right now, I'm happy with the profits we've made. I'm sitting on the sidelines eyeballing this price target down here at 76 cents. And of course, my price targets in the higher time frames are for us to come down to these volume profiles at 50 cents. We talked about a 60% drop coming into these markets. We've already started to nuke pretty hard since we made this prediction, down about 22%. I think we've got about another 48.8% to go until we have a significant bounce, which is not me saying I think the bottom would be in down here at 50 cents. I do just think as we come down and make new bear market lows, we probably will bounce from this psychological level before heading back down into new bear market lows. So for today, my friends, that's all I've got. I'm on the sidelines. Once again, congratulations if you did enter this trade with me. If you did get in on this trade with me and you did make profit with me, once again, congratulations. If you want to say thank you, help me get these videos trending. Leave a like and a comment down below. This is a great way to boost my videos on the YouTube algorithm. More people can find out about my videos. More people can find out about my KDA KTA. Also, if you do want to support the channel further, you can click the join button and become a member. But really, liking and commenting my videos is a free way to help me out with the YouTube algorithm. So for today, my friends, that's all I've got. If you want more of my content until my next KDA update, make sure to follow me over on Twitter at 618_cowboy. But I'm going to leave it here for today. It's been your boy Cowboy Trades. I'm out. Peace.